So I'm going to bring up Meta's current valuation, which, it's actually, it's pretty attractive still, even at these levels. We've got it on a trailing basis. It's 28 times earnings, 36 times free cash flow. I mean, very reasonable. And then on a forward, let's see, next 12 months basis, we
Might be
got it
like
at,
infinity times forward free cash flow because I don't think they're going to be making any.
yeah,
But
that's where it gets to 153 times free cash flow. But 21.7 times earnings and 11.7 times EBITDA, which those, I mean, once you kind of factor in the level of spending that they're doing, this could be at the same free cash flow multiple if they really wanted to. Zuckerberg is almost like spending because he thinks he has to. But when you're looking at the earnings and the EBITDA values, are you in any way concerned about Meta's current valuation?
um, I mean the four Ps three ticks below or 3 points below the 10-year mean, which is so it's not super stretched in terms of Meta versus Meta. Meta versus everyone also 21 times forward. Maybe I think that's still a discount to the S&P because I mean the S&P is not moved at all amid this software sell-off. So and I think they're in the more deeply into the 20s for forward earnings multiple, but I don't have that off the top of my head. But I think from a growth multiple standpoint, we're not really going to get much profit growth this year because they are going to keep investing like crazy, barring some big change to the spend plans and or some year of efficiency type pivot, which probably is coming at some point, but there's a good chance it's not coming in 2026. And I think I mean, you kind of have to get comfortable with believing in Mark Zuckerberg and believing that these investments are going to allow them to kind of elongate the profit growth runway and the engagement growth runway and all those things that are going to turn into more shareholder value. And I think his track record over the last or a few decades or a couple decades at this point, not a few decades yet. He's still kind of a spring chicken. I always forget how young he still is, but it is phenomenal. And we're seeing him now with new bets on the smart glasses side, absolutely killing it with the Ray-Ban and Oakley partnerships. Again, we saw him willing to greatly pull back on the CapEx metaverse plans in 2022, and we saw more cuts to that announced a couple months ago. I think it was like a 30% cut to that division, and they reallocated to super intelligence and Alexander Wang and everything they're trying to do on that side. So I think his track record is very good, and you have to kind of believe in his track record remaining good for all of this big spend to not make you nervous as a shareholder or not make you too nervous as a shareholder to, I guess, no longer be a shareholder.